Well, folks, it seems the robots are at it again. Not content with taking our jobs, they're now coming for our stock portfolios. Last week, the US stock market experienced a seismic shift. And no, it wasn't triggered by another Elon Musk tweet about his dog. This time, the tremors originated from a rather unexpected source, a Chinese AI company called DeepSeek. DeepSeek, for those unfamiliar with the name, is a relatively new player in the AI game. However, they've certainly made a grand entrance. Their latest creation, an AI model dubbed R1, has sent shockwaves through the tech world and beyond. Imagine the collective gasp of Wall Street analysts when news broke that R1 boasts capabilities comparable to its American counterparts, developed at a fraction of the cost. The financial district, known for its love of expensive suits and even more expensive coffees, suddenly found itself facing an uncomfortable truth. It seems you don't always need Silicon Valley swagger and a bottomless pit of venture capital to make waves in the AI arena. Who knew? So, what makes R1 so special? Besides its name sounding like a droid from a low-budget sci-fi flick, that is, well, it all boils down to cost effectiveness. While US tech giants have been throwing around billions of dollars to develop their AI models, DeepSeek claims to have created R1 for a paltry, by comparison, $5.6 million. That's less than some celebrities spend on a weekend getaway. It's enough to make one wonder if those Silicon Valley giants have been overcomplicating things, or perhaps just padding their expense accounts. This stark contrast in development costs has exposed a vulnerability in the US tech industry. Suddenly, the narrative of American technological dominance is being challenged, and not by another superpower, but by a scrappy startup with a knack for frugal innovation. It's like finding out your artisanal, handcrafted, locally sourced bread was actually beaten on price by a supermarket-own brand loaf. As news of R1 spread faster than misinformation on social media, the US stock market went into a predictable frenzy. The tech-heavy Nasdaq, which usually resembles a vibrant coral reef of gains, suddenly looked more like a scene from Jaws after a feeding frenzy. Nvidia, the darling of the graphics processing unit world, took the biggest hit. Their stock plummeted almost 17%, shedding a record-breaking $588.8 billion in market value in a single day. To put that in perspective, that's enough money to buy every single person in Wyoming a lifetime supply of cowboy hats, and still have enough left over to launch a small satellite into orbit. Other tech giants weren't spared either. Meta, Alphabet, and even Nvidia's competitors like Marvel and Broadcom felt the heat. It seems the market, in its infinite wisdom, decided that if one tech giant could be outdone on cost, then who's to say others couldn't be next? Let's explore experts chime in innovation or illusion. As the dust settled and investors frantically tried to decipher their Bloomberg terminals through tear-stained glasses, the experts emerged to offer their 2 cents, or should we say $2 billion worth of opinions. Mark Andreessen, the venture capitalist known for his bold predictions, hailed DeepSeek's achievement as one of the most amazing and impressive breakthroughs. Meanwhile, Charu Chanana, a market analyst, suggested that DeepSeek's rise could signal a renewed interest in undervalued Chinese AI companies. Of course, no market panic is complete without a healthy dose of skepticism. Michael Block, a veteran market strategist, cautioned that the market reaction might be overblown. He hinted that pre-existing anxieties about the Trump 2.0 era might be amplifying the fear factor. It seems even in the age of advanced algorithms and artificial intelligence, good old-fashioned human emotion still plays a significant role in market movements. Who knew? Coming up next is a dose of reality, separating hype from hard data. Now, before we all start brushing up on our Mandarin and investing our life savings in Chinese tech companies, it's worth taking a deep breath and injecting some much-needed rationality into the situation. While DeepSeek's claims about R1's cost-effectiveness are certainly intriguing, they haven't been independently verified. It's entirely possible that they've stumbled upon a revolutionary approach to AI development, or, they could just be really good at creative accounting. Furthermore, R1 is currently positioned as a consumer-focused language model similar to ChatGPT. Its capabilities in more complex fields like industrial AI, where the real money resides, remain unproven. It's like judging a fish's ability to climb a tree based solely on its swimming skills. Sure, it might be a fantastic swimmer, but that doesn't necessarily translate to arboreal agility. Let's dive into the future landscape, a new dawn in the East. So, what does this all mean for the future? Has the balance of power in the tech world truly shifted? Well, it's probably too early to declare this the dawn of a new era dominated by Chinese AI. The US still holds a significant edge in areas like research, talent, and infrastructure. However, DeepSeek's sudden rise serves as a stark reminder that the global tech landscape is anything but static. The sleeping giant of Chinese innovation has been roused, and it's bringing its A game, or should we say its AI game, to the table. One thing's for sure, the future of AI is going to be a lot more interesting, and probably a lot more competitive. And hey, maybe this newfound rivalry will even lead to more affordable AI solutions for everyone. Now, if you'll excuse me, I'm off to invest in a Mandarin phrase book and a fireproof bunker, just in case the robots decide to take things a step further. Until next time, stay informed, stay skeptical, and try not to let the robots harvest your organs. Thanks for watching. Don't forget to like and subscribe.